First off, let's tackle Europe, shall we, since it is the big story this morning. Downgrade of Italy. You're pretty bearish on the Eurozone.
Well, I've expected for 10 years now that the euro wouldn't survive. It wouldn't survive the first really big liquidity contraction. And I think this is pretty much par for the course. I think it makes sense to downgrade Italy. Quite honestly, I think there is a real question about whether or not Italy will be forced eventually to default. I think Spain, Portugal, Greece, all the usual suspects. I think it's going to be very difficult for them to adjust.
Okay, so Italy might default. It might not default as well. What can save the Eurozone right now?
Devaluation, breaking up the euro is the only thing that can save the euro at this point.
Okay, well, that's not going to happen anytime soon, I don't think.
Soon, but it will happen. Yeah.
Okay, so basically you're predicting an implosion in Europe. What does that mean for the rest of the globe?
Well, the thing is that there's really two Europes. There's the trade surplus Europe, which is Germany, and a couple of other smaller countries. And then there's the trade deficit Europe, which is the Italys and Spains and Greeces and Portugals and whatnot. And so the really key thing is that whatever happens there, what is the impact on the net balance of trade? And it's a little bit hard to predict because it depends on how they leave and how they break the euro and whether Germany leaves or whether Germany stays and a number of other things. But one thing that's very clear is you can't run a current account deficit unless you're running a significant capital account surplus.
Right.
In other words, the Spains of the world can't run current account deficits unless there's net inflows.
Right.
And those net inflows are drying up and in fact may be turning into net outflows because of flight capital. When that happens, those deficits are going to contract and maybe go into surplus. That means something else has to happen somewhere else. And historically, the most likely thing is that countries like Germany, Japan, China, countries with very large trade surpluses, will see their surpluses contract very quickly.
Now, you've been predicting the breakup of the euro, you said, for the last decade or so?
Yeah, basically since the euro was created. You know, the argument was, again, based on the history of currency unions. During the period of very rapid global liquidity expansion, these currency unions always survive. But none of them have ever survived when there's a significant global contraction. The only exceptions are the German currency union and the U.S. currency union. In both cases, you had fiscal union, which allowed the currency union to survive. But without that, they never survived.
Okay, well, you were the MD of Latin America for Bear Stearns, so I assume you probably studied what happened in Argentina when they defaulted on their loans as well. Is this similar to what we're seeing in Greece? You know, Argentina came back eventually.
Yeah, what I argued back then, and back in 1998, I argued that a default in Argentina was almost inevitable. And the basic argument was that the earlier that they defaulted and adjusted the currency, the less painful the whole process would be. And it also seemed to me that there was going to be zero growth until they actually devalued the currency. And in fact, that's what's happened. That's not to say that Argentina is in great shape, but it's in much better shape than it would have been had it tried to hang on to the currency for another year or two.
So you're saying just let Greece go right now. Just let this happen as soon as possible and get on with it.
You've got to adjust. You've got to adjust wages and prices. And one way you can do so is with very, very high unemployment for many years that sort of grind wages down and grind prices down. And the other way you can do it is by devaluing the currency. So Greece, as long as they're on the euro, they can't devalue.
Right.
So they've got to get off the euro.
So we got news that there could be some big news tonight on the trade front, with the U.S. Trade Representative expected to announce a major enforcement action against China to try to find out what that might be and how this might impact the two economies. We're back with Michael Pettis, who's the chief strategist at Guosen Securities, joining us here in Hong Kong. And Michael, what do you think this might be here?
No idea what this might be, but I think we can pretty much expect over the next year or two that there will be continued pressure on the trade front. Again, historically, it's pretty rare to see a country with slow growth and high unemployment and a very high current account deficit in which the deficit doesn't become a heavily politicized issue. And I'm pretty sure in the United States it will become one.
Is this the right time to be, tit-tacking on trade disputes since, doesn't the U.S. have their own problems to deal with, like slowing growth?
To be very cynical, if you are a trade deficit country, this is exactly the right time to do so. Intervention in trade is bad for global growth. But it's not very clear historically that it's bad for everybody. So, for example, if you go way back to the 1930s, when England was the big deficit country, there was great resistance to intervening in trade, but finally around 1930, 1931, they began intervening. They devalued sterling, they put up protectionist tariffs, and England started growing relatively quickly. It was surplus countries like the United States that had a devastating period. And that's what really worries me. It's that if the surplus countries don't recognize that there is a tremendous incentive for the deficit countries to intervene in trade, then the deficit countries are likely to intervene in trade. And that's definitely bad for the global economy, but not necessarily bad for the deficit economies.
Okay, that's interesting. Let's also talk about and touch on what we introduced this segment based on, which was what the economist at Deutsche Bank is predicting, stimulus coming from China. Isn't it a little too early to be talking about 4 trillion yuan in stimulus right now?
Yes, I think the Deutsche Bank's comments are conditional. What they're arguing, I think, is if that there continues to be a very rapid slowdown in growth, then there would be very strong impetus on the part of Beijing authorities to launch another stimulus package to get growth up. Remember, the only thing in China that really works is increases in investment. It's the only way to get growth up. So there's been attempts to slow down investment growth, especially in the real estate sector, but also in the infrastructure sector. But those attempts will very rapidly generate much, much lower growth rates. And to the extent that Beijing is worried about that, especially with the leadership transition coming in roughly October of next year, then some people are arguing that they will step on the accelerator again and we'll see a very big stimulus package. But I think the jury's still out. We don't know for sure.
Well, China was ahead of the curve with their first stimulus package back in 2008, so I guess that this isn't too far-fetched as a prediction.
Yes, but the difference is, I think, that today there is much more recognition that China is overly reliant on investment, and that one of the consequences has been an unsustainable increase in debt. And debt levels today are definitely much worse than they were in 2007, 2008.
For you two that don't know, Michael's, shall we say, a godfather of rock in Beijing. He's been helping bring up these punk bands in the Chinese capital for some years now.
Not just punk, a wide variety of
wide variety of rock bands, etc., etc.
That I did not know.
You did not know that. But is China rocking itself?
Beijing actually has one of the most exciting new music scenes in the world right now. The audience isn't big, but the music is spectacular.
Is it? What about the economy? Is it spectacular right now?
No, China's growing very rapidly, but it's a very unhealthy type of growth. It's all debt-driven, investment-driven growth. And I think it's widely understood that that there is going to be a fairly difficult adjustment process.
Yeah, when does when this investment process winds to an end? I mean, where does it leave things?
Well, unfortunately, investment drives almost all of GDP growth. The balance is the trade surplus, and I think we can all agree that the external environment is not especially good. And then there's a little bit that's driven by growth in consumption. And the great hope is to be able to raise consumption very rapidly.
Well, that's the idea, isn't it? Qualitative rather than quantitative growth.
But that's not going to happen. It's going to be very difficult for that to happen. It's going to take several years before consumption really is strong enough to power growth.
There was a report by Deutsche earlier about a possible stimulus plan that China might be crafting up, saying neighborhood of $750 billion or so. Do you put much merit into something like that?
Well, I think the basic argument is that if growth continues to slow down very quickly, that Beijing is going to want to do something to recreate growth, certainly before the change in leadership at the end of next year. And the only thing that they can really do is to increase investment. Now, I don't think it's likely that we're going to see an increase of anywhere near that size, because I think the concern would be that such a huge increase would almost certainly worsen the debt problems.
And the inflation, possibly the inflation issue as
Inflation maybe, maybe not, but certainly the debt problem. And I think, frankly, in China, the debt problem is the biggest problem.
I was speaking to some fixed income folks, actually, and they were talking about the issue about the municipalities and the debt issues that they're having with them. Are you hearing anything else on the ground as to what the local banks are saying about this particular debt issue? Are we downplaying it? Are we overplaying it? How serious is it?
Honestly, I don't think it's possible to overplay the seriousness of the debt issue in China. I think debt levels are rising quickly. I think Beijing understands that. But I think there's really no way to generate growth without continued increases in debt. And that's the balance they've got to figure out.
Okay. Well, let me ask you then about the theories that they're a hard landing. Do you even know what a hard landing means in China?
No, everyone talks about it, but nobody really knows what it means. Yeah. So I don't know if I believe in it or not.
Right. So what does it mean when someone like Jim Chanos, the hedge fund manager, he says China's on a treadmill to hell? What does that mean to you? And is that going to happen?
Well, I think much of Jim's analysis is correct. I think where I would disagree with Jim is that he believes that there's going to be a collapse in the banking system. And I think the Chinese banking system doesn't do collapse. It's stable. It's very inefficient, but it's stable.
Effectively as well.
Yes.
So, I mean,
and so the deposits are guaranteed and the whole bit. What ends up happening in China is that in order to resolve all of this debt problem, you basically resolve it in the form of extremely low interest rates. Yep. And that means that you're transferring money from the household sector to repay all of this debt. And so it's not a coincidence that in China household consumption is so low. It's so low because the households had to pay to clean up the debt. And I think that's really what we have to worry about. Another big round of cleaning up bad debt.
Nothing grows in a straight line forever, does it? I mean,
no.
So something's got to give at some point. It's just trying to identify what it is, and everybody, it's been, every prediction that we've had so far has gone wrong, really.
It depends what you mean by go wrong. You can always generate growth by increasing investment. So actually many of the predictions came true, but they were overwhelmed by significant increases in investment, which ended up postponing the problem. But we have seen very volatile growth in China. We have seen debt problems. Many of those predictions did come true.
You know, I mean, in terms of China's economy, roughly what, 1/3 of the exports goes to the United States, 1/3 goes to Europe, and with what we're seeing, we've got a mixed picture of economic data in the U.S., and you've certainly got quite a negative picture right now that's happening in Europe. At what point do you think that you're going to see, when we've seen some ratcheting down of growth prospects, but even more so to reflect the current situation of what's happening in Europe, and how much of that ends up being permanent if the EU leaders don't get this resolved? I'm trying to gauge the reaction and in terms of the Asian market, specifically in China.
Right. Well, first of all, the European leaders won't get it resolved.
That's a whole other interview.
We're going to see the euro collapse, aren't we?
Yes, several countries are going to be forced to leave the euro. But the way I think about it is we've got a problem of global demand, and there's two sources of demand. There's consumption, and consumption is driven largely by the rich countries, and as you know, they're in trouble. We're not going to get much consumption out of them. And then there's investment, and recently we've had a significant surge in investment in countries like China, Brazil, and elsewhere. But that surge in investment, which has lessened the reduction in global demand, was really aimed at future consumption, which isn't going to happen. So my worry is...
That's quite a bleak picture.
Very bleak picture, yes. My worry is that...
Very dark today, aren't you?
I'm always pretty dark.
I mean, if Rish gives you $1 million, which I know he's got under his mattress, what are you advising your clients to do with that money at this point, given the bleak outlook? I mean, you're just going to keep it 100% in cash?
Well, if you look at these historical... If you look at the globalization cycles in history, in the boom stages, the more foolish you are, the more heavily you get rewarded. Overly foolish people get rewarded the most.
How come I haven't been?
we should be quite rich.
But in the contractionary period, it's the people who are overly prudent who get rewarded. So my argument is that this is a good time to be overly prudent. I like the renminbi because I think it's a one-way bet. Probably the Swiss francs is a one-way bet.
Is it really though? I mean, if the scenario plays out as you suggest within the investment side of things there, then perhaps it's not a one-way bet.
No, because if we get... the key thing is to watch two things, is to watch the current account surplus and the level of reserves. And as long as reserves are at this level, it's going to be very, very... there will be no pressure on China to devalue. Now, that means they might devalue, but if the current account is very high and they devalue, I think that would cause tremendously negative feelings in Europe and the United States and might lead to some sort of trade intervention. So I think the combination of a high current account surplus and high reserves means that it's almost impossible for them to devalue the currency.
Okay. Now, I want to talk about rock bands.
Yeah, I was going to ask which your favorite one was and which one we have to watch out for.
Who's going to be the standout one in the next few years? You have a few of them.
Is he in the rock band?
No.
He's a supporter, purveyor, shall we say.
I learned early enough never to perform music.
Chinese capital.
We actually have a young band touring England right now called Carsick Cars, which is probably the most famous.
I like Carsick Cars. They're pretty good.
They're probably the most famous band. They're going to be touring Australia in a couple of weeks. PK14 just came back from Italy. There's a really wonderful scene. It depends on what kind of music you're interested in.
I wanted to know about the change in culture in China. You know, we have a new leadership coming in next year, right? So there's a new vice president, new president, a new premier, and then, you know, you see how these young kids develop the culture in China. Right. I mean, is it going to stay the way it is for how many more years?
Well, I've been in China for 10 years, and there's sort of a joke that a generation lasts 5 years, and it's really true. The students that I have today, compared to the students I had 10 years ago, it's like kids with their grandparents. It's a completely different culture. So that's one of the reasons why it's so exciting to live in Beijing. You've got this massive, rapid cultural change.